Hola. Hola to the people. Hey, hey. Hola to the people. Hola. Hola to the people. It's weird. It seems like now. Okay, that's not what I wanted. So good morning. Good morning. I know it's not morning, even though I'm saying good morning. Hey, everybody. How we doing? Y'all come on in the room. We get ready to do live at 5. Live at 5 on a Sunday evening. It's breezy outside here because we've had this crazy storm. And if you're on the east coast of the world, you may have been a part of this crazy storm too. And we basically had this crazy rain that lasted forever. It was raining like it was hurricane time, and hurricane season is over, but it's raining like it's hurricane season. It rained all yesterday, rained all night. It finally quit today around, I guess around 12 or 1. It finally quit. Hey everybody, y'all come on inside. Come on inside. Let's see what we can do in here. See what we can do today. I think I need to close this. I got some stuff, a bunch of stuff open. I always go through this like, why you got so much stuff open? Then your computer going slow and you wonder why. There's no reason to wonder why. No reason to wonder why it's going so slow if you don't have it where it can go any faster, right? No, I don't want to say that. Thank you. No, hey y'all. Hey. Come on in the room. Come on. I want to make sure that Instagram is running. It appears to be green. Instagram StreamYard, which is the people that I use for streaming to multiple platforms, now has added Instagram to the streaming. Y'all know I would always be on Instagram at the same time, and I would be telling you or telling people to go over to Facebook so they could see. Oh, that made me much bigger. I was going over to where I was saying tell people to go over to where they could see me and go over to like YouTube so you can see what I was doing. And then Instagram finally got it set where you can stream directly to Instagram. It's like, yes, this was a good move. Good move. Okay, so I want to make sure we got a little bit of an agenda today. Our agenda is kind of our steady agenda where we will talk a little bit about last week, what happened last week. We'll look at what we think potentially will happen this week coming. Yeah. And we're going to look about some Christmas rally trade ideas. Yeah. Do y'all think we're in a Christmas rally? If you think we're in a Christmas rally, say yes. Hi, Lady T. If you don't think we're in a Christmas rally, say, it's just doing what it's doing. You could say, meh. If you think we're in a Christmas rally, say yes. If you don't think we're in a Christmas rally, say meh. All right. Share with me, please, where you all are from. I would love to know the people who watch. I know I have people that'll come in that are in like my community, but I want to know if there's people who are from outside of my community who also hang out with us on Sunday afternoon, Sunday live at 5. Sunday live at 5. Hey, Tamar, how you doing? Hey, everybody. Hey. Oh, looks like there's nobody watching. Oh, there's somebody watching on Facebook. I was like, where the people at? Hello, Erica. How we doing, everybody? Y'all know I'm in Jacksonville, Florida, so I'm up here in the top part of the state, and I'm on the East Coast. So I was just talking about the storm. I almost started singing that song about "I Told the Storm," but I'm talking about the whatever that thing was called that we had going. It was something that was going, a storm or something or other, and it rained some more. It finally quit today. It quit raining, but our ground is like it's just it took all it could take. I've had all me could stands. My somebody in our neighborhood has a rain gauge, and she said there was 5 inches of rain by the time it all quit. So there's that. Okay, there is that. Making sure we're getting. Oh, say our agenda. Kunbanwa, where's that? What is Kanbanwa? What's that? Boone Wolf. Hey, how's that? Hey, Adrian. What is Kanbanwa? Is that something I don't know? Some language I need to learn a few things? What's up with that? Let me see if I'm live on Instagram. It doesn't show that I'm live. Anybody who's following me on Instagram, it doesn't show that I'm live right now on Instagram, even though it says here that I am. You are live. It's what it says. You are live. Okay. What happened last week? First of all, what's probably coming this week? We'll talk about earnings, the meetings, The third thing, we will talk about potential trade ideas for this week. We'll look at some charting. Okay, talk about some stuff along the way. This is an engaging situation. All right, this is an engaging situation, so I want you all to be sure to engage. Yes, I am okay in Florida. It was a little rainy, but thank God we made it. Thank God we made it. That's who watches over us in the storm. He watches over us every day, storm or no storm. He watches over us. All right, so let's look at, I'm going to present here. Let me get to the right screen on here so that way we can see what we need to see. Charts to take us to SPX. That way when I say share screen, I don't have to have you all, your eyes going nuts. Okay, so we're going to shatter screen and we're going to share screen 1. Allow. All the gadgets are right behind the camera, so I have to be strategic. So this was last week's SPX. Let's look at it from the weekly chart. We're going to look at the weekly chart so we can see what did last week look like. Y'all see this big old green candle here to the right? This big green candle to the right, or it's bigger than the others for sure, is what last week did. Now, last week we had CPI, we had PPI, we had, FOMC, LMNOP, we had all the things that we had unemployment. I'm not trying to be funny, but we did have a lot of different stuff that happened last week and created a great deal of volatility. So with all the volatility that we faced last week, we were still able to maneuver the landmines. This is where, quick little tip in. When you have a community to trade with, that community helps you to navigate, right? Yes, there's some things you can manage on your own. One thing I love about trading is that you can trade by yourself. You don't really need an audience or need other people. You can really do it by yourself. But community matters, right? Community matters. So if you're with other people, they can help you navigate through some stuff. Where you get a little antsy and anxious, somebody else in your community can say, no, I think you're going to be okay. Calm down. Or you get ready to jump into a trade, somebody in your community says, no, you might want to hold off on that, sis, because it's not, maybe it's not, ready yet, or something else is going to happen at 2:00 that you forgot about. Yeah. So in the mornings, we do our calls every morning at 9:30 now. For the membership, we do our calls at 9:30. And that call helps us to see what is coming for the day. Educator to trader, and put it in the chat here. What is coming up for the day? And it, just really kind of sets your mind as to what's going to be on the menu for the day. You might be one who likes to trade in the morning, and you like to let your trades go all day. But if you know that somebody's going to speak at 2:00 in the afternoon, then you need to be aware. Or maybe you're somebody who sets your trades at 1:00, and you can let them run all the way up until the expiration time. But, a 2:00 event like FOMC speaking, that's what we call a binary event. And that can potentially run a good trade, out the window. Yep. Boonwolf says going to be a big letdown coming soon. Yeah, we are definitely in a saturated place. We're definitely saturated. Like I was just talking about how the ground is super wet outside and the water can't hold no more water. The ground can't hold no more water. That's where we're pretty much are as far as this market goes. We are up there. So anyway, this is our weekly chart from last week. We had a big old green, and much of this, I think, came as a result of FOMC. We had some good numbers that came as far as our economy and stuff went. And then Rome came on Wednesday, I think it was Wednesday, came in and said that they were going to pause the rates one more time. And then next year they were going to start to bring them back down. The people were like, yes. And they pulled the trigger on some more trades. Okay, so this is what we end up at. Let's see what we kind of have as some resistance up here. We're up pretty high as far as some resistance here. Let me do a little quick chart to see what we see as resistance. We're up here, and if I'm looking back, you're gonna start where you are. For those who are new to charting or want a little more information, you start where you currently are. And if you're looking for resistance, you're going like up and to the left to see where did price go and turn around. And it's up here. You got the zone of 47.78. It can go up as high as 48.18. I usually just mark the top of the box. Some people mark different things. I mark just the top of the box, right? I just know that it's going to be a zone and that it could be a little bit higher, a little bit lower than that, that every line here is a zone. It's not a hard line. It's a zone. So if we're looking for that as resistance, 47.78, I just said we're currently at 47.19. So we're about 60 points away from what potentially could be a strong resistance. And if we're looking downwards as to what is below current price that would be a support or resistance area, we can look at 45.84, because this is the place where it went up here and turned around. This was back in July, but now, support and resistance are interchangeable. So where it was resistance back here in July, because price is now above it, this same line is now support. Okay, so we're looking at 47.78 as resistance and 45.84 as support. That's on the weekly chart. Okay, weekly zones are stronger than daily zones, and monthly stronger than weekly, so on and so forth. All right, so at this point, we're kind of in the upper middle of this zone, right? We're about 60 points away from the top of the zone. Let's switch over to the daily chart. Switching over to daily. See what it looked like back here in the dailies. This is what last week did. Now, for those of you don't know if you're one who's big on candle patterns, but you definitely want to look at candles. Start with the chart.com. And I'm writing it out because my buddy FB they be tripping over these links. I don't know when it got to be such a thing. Start with the chart.com. There we go. It's not two M's, it's only one. But I'm mentioning that website because that is the place that I've done a free webinar for you to go ahead and see things like chart patterns. I'll also run it on the bottom here. But you can look at chart patterns, candlestick patterns, like what are some different things that are going to help you with some technical analysis. And it's a free webinar. All right, it's a free webinar. No reason you did not go on over there and take a look. It's less than an hour. It's less than an hour of watching, but I'd like to believe it is loaded with the value. Okay, so we're looking at the daily chart now. And looks like our price went up here and we turned into having this doji or sword or whatever you want to call it. An indication of a potential turnaround is this little doji here. Could also just mean we're taking a break. Price is indecision. We don't know which way we're going. It could just be a pause place and it could go up some more. It could pause here and reverse. It's not a clear sign of reversal, but it definitely lets you know that we're at the place where buyers and sellers are agreeing on this place. Right, so now somebody or wrestling over this spot. That means that somebody's got to decide which way we're going. These kind of things a lot of times do come after a big move, like a big candle like this. You do usually have something like an indecision candle or doji after that, because a lot of movement happened on the 13th. So the next 2 days were kind of like, "Ooh, we tired, boss. We need to take a little break, break." Okay, so that's where we are. I told you above us, we do have 47.78 as far as resistance goes. I was trying to go back so I can see. I need a little more time. on my hand so I can see back a couple years to see where is our resistance from here. Looks like back in January of 2021. January of 2021 looks like we're in the zone. Get in the zone. Looks like January of 2021, right here. I'm saying right here. You got to be watching my screen. But right here, 47.20. We're actually just in this zone. This is where I marked it at 47.22 on the daily chart from Thursday, and we're right there in that same area from January of 2021. Could be a potential. If we go up a little bit higher, you do see it, this zone up here I just mentioned on the weekly chart. It's 47.78 zone. There's like 3 or 4 or 5 candles here where they kind of all sat together and all kind of just hovered, and then dropped out. That was back in January of 2021. Same thing here. So where we are currently, 47.22, is a resistance zone. Okay, we are in a resistance zone right now as far as the market goes. All righty. So all this green, look at all these days from the past several days. We had a little consolidation period back in the end of November. Once it got moving on December the 6th, we've been moving ever since. Looks like we were at this resistance area 7 back from July at 45.99. Once we got past that and it went through that zone, it didn't blow through, but once it went through that zone, it went ahead on up to the next place. And that's kind of how support and resistance works, right? You've got places and stages along the way. Now, nothing makes price go up except for buying. There has to be money infused. You know, the only way you make these prices go up is somebody has to be putting money in to help it move up, right? And prices come down when somebody's selling and saying, I got what I wanted out of this, which is what happened like after Wednesday. Everything ran up real crazy on Wednesday. And then Thursday morning, people were thinking they was going to be able to get in, call some more, and basically come to find out that people was like, oh, we had all-time highs on AMD. Let me go take my money off. We had all-time high on NVIDIA. Let me take my money off. We had all-time high on Microsoft. Let me go take my money off. And then the price came down some a little bit on Thursday. And then it went up a little bit on Friday. Friday was also quad witching. I'm not sure if everybody knows about quad witching, but Friday was also was quad witching. So quad witching was you had stocks expiring, not stocks, so they don't expire. Options, bonds, monthlies, weeklies, dailies, like all the stuffs was expiring on Friday, and quad witching is where there is a tremendous amount of volatility because of the fact that things are, people are closing positions and reopening positions for subsequent quarters or subsequent years. So a lot of people start to buy their leaps during quad witching. These are the things that kind of happen. There. Okay. All right. So that's what went on last week. Let's go look at what may be coming in the future. Well, let's go to earnings first. Let's talk about our earnings first. No, that's not the one I want. This one. Come on, clear this. Open up. Okay, there we are. Let's go to oh no, it can stay here, I guess. That's what screen we're looking at. Okay. This is the earnings that are coming up next week. December the 18th. Look at Earnings Whisper changing their graphic to red for Christmas time. I see y'all putting their red in there. This is what's coming up next week. Alrighty. Heiko Quipt is Monday after market closes. Accenture, Fuel Cell Energy. A lot of people were trading Fuel Cell for a while. It's funny how these stocks kind of go in cycles where everybody's talking about them all the time, and then the next thing you know, nobody's talking about it at all. Fuel Cell was one of those where it was getting talked about all the time. FactSet, Organogram, that's all Tuesday before market opens. FedEx is on Tuesday after market closes. Steel Case, Worthington, Enerpac, No Labs, and Shimmick. Now, one thing you need to keep in mind too is like FedEx is having their earnings on Tuesday after the market. It seems a lot of times that the other people who are in that same space will also move along with each company. So like FedEx is Tuesday, but UPS's stock will probably move along with them. All right. So just know that a lot of times, not DHL. Who's the people, not the brown people, who the people who, maybe it is DHL. Yeah, it's DHL. Other shippers will also maybe show up and their stocks will move along with, like you see, NVIDIA, AMD, and SOXL, Taiwan Semiconductors, all these people move together, right? All these people move together. I'm trying to see the comment that somebody just left, but my system is tripping. Wednesday before market opens, General Mills, FedEx, Micron, Centus, and Nike, only looking at those earnings. Okay, Curtis, if you've got some idea of how you trade earnings, go ahead and tell us in the comments what you do to trade earnings. Because as sellers, we've not really found a really good, my community, we've looked at all kind of things, not really found a good way to trade earnings. Not really found a good repeatable system besides straddles, which, you know, a lot of people do straddles, and that's a buying thing. But for selling, we hadn't really seen. So if you got an idea, put us something in the chat. Wednesday morning, General Mills, Live Ventures, Winnebago, and Toro, the grass cutting people or yard equipment, I think they are. Micron is Wednesday after market. BlackBerry still around doing their thing. Miller, no. Thursday is Carnival, Cruise Lines, People, Carnival Corporation, Centus, CarMax, Paychex, Apogee. Thursday after the market closes, we've got Nike, AAR, Simtrex, Mission looks like in Limonada, and Friday is nothing. Curtis said definitely not trading their earnings, just paying attention to them on how the economy's doing. Oh, okay. Listen, I bet you Nike's gonna come out and say, we still selling all the shoes they'll let us sell. We still selling. Micron is in the technical space, right? That's in the tech space, isn't it? That's Micron. Let's see. Okay. Oh, no, I want to go there yet. Let's go to the we'll close this off, and then let's go to our meetings that are coming up for this week. Our meetings that are coming up. We use forexfactory.com calendar/calendar. We use this. We don't trade Forex. I've always say this. If anybody tells you somebody is trading for they contact you saying they're me because they trade Forex, they lying, because I don't trade Forex. If they're asking you for money or something follow them. Follow me down the Forex rabbit hole. I don't do that anymore. I used to do Forex. I just don't anymore. Okay, Micron is in the chips. The semiconductor chips is Micron. Ivy Flush Crush. Yep, look at options the day before earnings for strike price at support and resistance. Then look for them to rise or drop after. Well, we know they rise or drop after earnings. The question is just which way. Andercat, how do you know which way? Because yeah, they're going to rise or fall. It's just that which one. And it's like feels like a gamble, or feels like kind of a crapshoot when you pick earnings and then you think, oh, this gonna go up, and it runs down. Yeah, so it's probably better to just wait till the day after. Jamie says Micron is semiconductors. I know you told me that before. He's probably on there typing, I've said that before. Jamie's my dude. Memory chips is what I use them for, to build computers, but they are bigger than that. Okay, Micron's bigger. They're bigger than just memory chips. They're semiconductors. Cool. I think I remember that. They thought it was vague. I was like, I think that's in the tech space. Okay, cool. Micron. They're having earnings, I think, on Wednesday, I just said. So looking at the meetings for coming this week, Monday, we've got a National Association of Home Buyers, our housing market index. This is a yellow folder, so it's, low volatility is anticipated. Tuesday, we've got building permits, housing starts. These things are important from the standpoint of building houses. Those are really big, outlays of cash, and it follows on with so many other things. When you start a house, you got all the other follow-on industries that make money off of this process, and so it supports the economy. If people or companies are not starting as many houses, or people aren't buying as many houses, or then it can be an indication of what's going on in the economy. On Wednesday, we have CB consumer confidence at 10 o'clock in the morning, existing home sales, which kind of goes with the Tuesday thing. Crude oil inventories is yellow, but it really should be orange. That's all on Wednesday. A little bit of volatility there, existing home sales and such. Now, all the real estate agents, of course, have come out to say, if he's talking about bringing interest rates down next year, you need to go ahead and get yourself locked in this year. So that way, when the interest rates come down next year, you can refinance and take money out. You have more equity. Of course, all the agents are saying, don't wait to buy your house until the interest rates come down. And I'm on both sides of that. I can see where people would want to wait till the interest rates come down to buy their house. Because you, of course, are the interest, if you don't refinance or something along the way, that interest is going to make your payments bigger for longer, or you're going to pay more money for the money, basically, is what it comes down to. But if you wait, you could potentially have more equity in the house, because once the interest rate comes down, the prices of the houses are going to go up, because now some of the prices of the houses are coming down because of the fact that the interest rate is higher. Okay, I'm trying to simplify it. I'm sure there's a whole lot more to it than that, but I'm trying to simplify it for us just as to why people would say, buy it now. Well, the house prices have come down a little bit because the interest rate is higher, right? So if you go ahead and buy a house at a lower price, interest rate comes down next year, whatever, then you're going to have more equity in your home. You could potentially refinance, you could sell it and get more money out of it. Andrew Cat says that earnings is a crapshoot. I look on the 3-minute for a direction if the price of the option falls significantly. Overnight before, the price is $6, but after earnings is 25 cents. Yeah. Okay. Got it. We've tried a few different things in our community with trading earnings. We've tried going out longer term, going out maybe 4 to 6 weeks to trade as sellers, because we're sellers. We've looked at straddles and strangles. We kind of looked at that, which straddles and strangles can be a little more of an impact on your budget. You need a little more capital sometimes, depending on what you're trading. Or you need to go like further out of the money, and depending on how much the price moves, you basically could wash away all your capital that you put in on that. So it's definitely what we've determined to do up to this point is just, if you really want to trade earnings, wait till the next day. Like wait till after the earnings is announced and trade that day. You can trade the wave of that day. It'll give you a little bit more information to work with. Okay. Thursday, we do have the final GDP quarter over quarter, which is important. GDP, gross domestic product, is an important piece of information. Unemployment on Thursday morning too is at 8:30. GDP price index, the Philly Fed manufacturing index. At 10, we've got CB leading index and natural gas storage. That's all Thursday. That's just probably one of the bigger pieces of volatility for the week is on Thursday. And then on Friday, we've got core PCE price index, durable goods, personal income, personal spending, all that good stuff. New home sales at 10 o'clock. Now, this is our last week leading into Christmas. Christmas is going to be next Monday, right? Christmas is next Monday. I'm sure the market will be closed on Christmas. And some of the big boys, just know that, we're in these, we might be out here in these stock market streets. But some of the professionals, they finna be on vacation. They're going on vacation for the holidays. So there may be a lot more amateur money in the market over the next week or so. They may put on orders and leave those orders to do, which maybe why we got having kind of the Christmas rally. I'm not sure if you all have heard that term before, but it's basically a notion, and it could just be a myth. I don't know. That during the Christmas time and Christmas holiday, that the markets really do kind of rally going up, and they rally going up. I can see where we've definitely had something happening over the last week or a couple weeks, but I think we also need to, as much as possible, stick to the technicals, that we can still look at our charts, and our charts can still say, well, we hit a support area and we're going up till we hit resistance. And when you hit resistance, the price is probably going to turn around. Some things, though, seem to be ignoring that resistance. Some stuff seems to be ignoring it. I was trading some stuff last week. XLI. I was trading XLI last week, and it was coming into what looked like a very good resistance area. XLI was like resistance magicians. I said, resistance my foot. And it went right on through and said, yep, we know it. Don't stop. Get it. Don't stop. Guess what? That's what XLI was saying, was that it was going on to see what the end was going to be. And it went right on. I'm going to show y'all the chart. Oh, by and large, we did fine last week, but that XLI jumped right over. It jumped right over the resistance area. See, I'm looking here. The resistance I had in line was right in this zone here, 110, 111. See that? And then on Wednesday, after we got we pausing, XLI kept right on pushing. It was basically doing like, anyway, it kept on pushing. Salt and pepper, it kept on pushing. So it's at 113 right now. I was looking for where is resistance up here. Do we have some? XLI is the industrial sector, the spider industrial sector. And you know what? I was telling Jamie in my message just before we got on this call. I'm not sure if he read it, because you know how you communicate with people and you just tell them what you want to say. You're not really having a conversation per se. You're more of you're more just like telling, like, I'm not necessarily, we're not talking about, I'm just letting you know what I'm thinking. And I was like, yeah, next year is going to be the ETF sectors for us. We leaning in a little bit harder on those with credit spreads. XLI was my biggest loss from last week, wiping out all my collateral. Oh, Aaliyah, I'm so sorry. Yeah, definitely. Some of these were, put credit spreads only. I had XLI. I only had a call credit spread on XLI because I felt like it was coming into, I entered the trade. Here we go. I entered it on Tuesday, right? To see it was going to come into this resistance area. And I think I might have had 111, 112. So I was even a little bit higher. And I thought it was going to come on into it, give it a little bit of room. Then it was going to turn around and come back. Yeah, right. It went right on through. And I did put on a put credit spread to get some of my money back off of the spread, but the call credit spread got blown through. Yep. So I was like, this right here doesn't even make sense. But I did find that like Amazon and I had a couple others, AMD. I had AMD as a call credit spread and thinking it wasn't going to be good, and the price did hit and turn back around. So it ended up ending, like, price ended right at my strike, which was like 149. I think it ended at like 140, 149 and some change. Like, but anyway, the call credit spreads didn't seem to be a move. Lady T said I got smashed in SOXL. Yeah, I'm really feeling put credit spreads at this point. And the reason I say this is because many things go up more than they go down. Stuff likes going up more than it likes going down. So if we can stay on the put credit spread side, the only thing is, as I'm saying this, I'm also thinking, because sometimes when you go with it goes up slower than it goes down. So if you're on the call credit spread side, and it starts to climb, you kind of got an idea. Like, I really could have gotten out of this XLI trade after Wednesday, even though I was partially breachy. It's closed at 111.81. I probably could have exited it between, and still, I kind of thinking it was going to turn around. Then, of course, it gapped up on Thursday. There went that thought. But when it falls, it just like falls hard. So put credit spreads are good too, but you're like, anyway, there's a gap here. I wrote that here. There's a buyer's gap in here. Buyer's gap in here. Basically, there's some buyers that are hanging out in this gap, and when the price comes down back into it, then it will run it back up. Buyer's gap support is usually at the bottom of the gap. Come in. Buyers are going to kind of move it up and down, up and down, up and down, and then it should go on back up. So if you are looking to see what would be support and you've got a gap underneath you, then the support area is probably going to be at the bottom of the gap. In this case, 111.81 is it. SOXL from the bottom put credit spread side, great. XLI put credit spread side, great. AMD put credit spread, great. I think Mara had a little bit of a turn, but that whole Bitcoin, all the Bitcoin stuff seems to be going up. Like Mara, Riot, Coin, a lot of those are going up. So that all of the semiconductor things seem to be going up. Apple don't seem to be going up too fast and too hard. But you know, Apple is always steady. Apple is always steady, right? It's got some up, but it's not open. Apple looks almost like SPX does. The SPX hit a 52-week high last week. Can't get in front of that train. I'm waiting on a retrace. I agree with that. I always tell my folks, do not get in front of a moving train. We're going to trade that first trade with the momentum. And I try to wait. If I'm going to do the opposite side, I usually try to wait till like the next to the last day if I'm going to do a credit spread on it. Like if it's on the week and I'm going to put credit spread, I'll wait till maybe Thursday to get in on the call credit spread side. And that worked out for me, except for that XLI was a little too early. I anticipated something that did not happen. I really should have waited to enter that trade after it had come into the really closer zone and then turned itself around. Yeah, it was doing the hokey pokey and it did not turn itself around. You know how they say turn yourself around? It did not turn itself around. All right. Let's look at some potential trades for the week. Let's look at some potential trades coming up this week. We got a pretty big list. Y'all see we got another big list for this week. Credit spreads. The credit spread challenge is still underway. Our folks are still hanging out in there. They're still making money. So learning how to use credit spreads for consistent income, right? Credit spreads can be used on anything and they don't take up a whole lot of your collateral. They don't take up a whole lot of collateral when you're doing your credit spreads. You can pick a regular stock if you want. You can pick that you want to use ETFs. I do find ETFs. I've enjoyed using SOXL. Sometimes it's really good to just do it on a plain stock, on just an individual stock. If you want, I was trying to find the call credit spread thing to run across the bottom, but I'm not seeing it. So there's that. But credit spreads basically is where you are going to have a spread, 2 lines here, and you're going to put up the collateral that is the width of the spread. It is a great way, and I'm not exaggerating and no cap. It's a great way to grow your account. It's a good, steady way. Some of us are looking for more excitement. You know, my community also does. Oh yeah, that Google Iron Condor did pay out last week. Thanks for bringing that up. I did the Google Iron Condor last week, and it did pay on both sides as well. What was I saying? I was talking about the credit spreads and growing your account. Oh, my community does use credit spreads on XSP and SPX each day too. So if you really want that, you know, adrenaline hit each day, you can get that by way of, you know, the credit spreads on XSP and SPX. They can be those are 0 DTEs. So you have to be mindful of 0 DTEs, that if they, you know, roll back up on you, your collateral is just like bye bye. If you have something like going through the week like XLI, even I had the week, I really could have closed XLI after Wednesday. You know, you've got the expiration is what we want for credit spreads, what we really care about. We need the price to be below our strike at expiration. But you can also, you got time to even put on like or in your mind to use a stop loss that says if it goes through both of my strikes and I don't see it turning back, then you know, reversing, then I probably can just close it and still leave with the majority of your money. You know, you'll lose some, but you still got an opportunity to do some other things to mitigate. When you're doing 0 DTE, you don't have as much time. But if you just want that adrenaline hit, maybe take $100 and run XSP each day, but maybe not let that be your thing all the time. Because if we do credit spreads on other things, we do have a longer period of time to allow it to do its thing. It means you got to look at the trade a little bit longer. Some folks don't want to do that, but you put alerts on, you can do other things, and you don't spend the whole day worried about whether or not the trade is going to expire below your strike. Jamie said, what tracks with Bitcoin? Mara, Riot, Coin, BITF. I don't think I know that one. BT, and Clean Spark. Oh, I got some Clean Spark stocks. They've actually gone up pretty nice. Jamie says, or skip the adrenaline, just snap into a slim Jim. Yeah. My thing is, I've not had the bandwidth for watching XSP or SPX through the day because I'm trying to get things accomplished during the day. And I find that if I'm trading like that on a daily basis, then that consumes my focus. And if I'm trying to get things done, I'm really working on some new stuff that I'm going to be able to put out into the marketplace. And I have to focus my energy to get those things done. And the longer it takes me to focus, the longer it takes them to get out, to the marketplace. The longer it takes me to be able to offer the assistance I know we all need. So you're seeing that resistance on Tesla just below 255. It's so close to that price. Got to dig into that one. Yeah, Tesla, I think actually has, you see I have it on both lists. Tesla is on the call credit spread and the put credit spread list for that reason. I believe it is probably going to be iron condors. It's been kind of consolidating for a minute. So let's go look at some of these trades. Let me put a little note here so I can see what I'm looking at. So we'll know if you see on this list something you want us to look at. We're getting ready to go chart some stuff. If you see something on here that is of interest to you, please put it in the chat so we can make sure that it gets it's good to look at. I know we're gonna do the trade desk, we're gonna do Tesla, we're gonna do, I think I'm gonna do you. How about we you want to look at Upstart and Affirm? Maybe not all of these, but y'all tell me which ones you want. I'm watching Intel pretty close these days too. Let's start with Tesla. I don't really trade Tesla a whole lot, but I did see that they were kind of consolidating. And I said, well, let's go take a look at put them on the list. They showed up on both lists. So when that happens, you got to take a look at it. Okay, let's put this where it can be smaller and we can use this to help us. Can y'all see that? Yes, everybody can see this. Okay, so we're on Tesla. We're on the daily chart. Let me get us some room here to check out. Notice here, charting, support and resistance is where it starts. Mara and Upstart. Okay, let me put Mara on the list. I already had Upstart on there. Oh, I didn't tell y'all about my trades from last week. Remember we talked last week about I was going to use PeakBot for the selling the wheel or doing the wheel, which is basically put credit spreads. I had TQQQ, which TQQQ, that trade, pew, pew, pew. Yeah, it did a really good job. And that's because TQQQ travels with QQQ. QQQ went up and I had a put, right? I also had XPing. TQQQ was good. I think I had 41.43 was my put credit spread. Was it 41.43? Yeah, I think it was. And then I had XPing. XP, I had 14.5, 15.5, and that one I had to roll because XP closed at like 14.60 or something like that. It just was, not gonna do. And I rolled it to see if it needed some more time. But I'm not a huge fan of rolling. I do roll periodically. You should roll when the price is between your two strikes, and you can roll for a profit. It was between my two strikes, but I did not roll for a profit. I rolled for a little bit of a loss to just give it more time. I'll give it this week. If it doesn't do what it's going to do this week, or early this week, I'll be bidding it a fond farewell. TQQQ though turned out to be a good trade. TQQQ is the mini of QQQ, and SQQQ is the short of it. SQQQ, not so much. It's looking real beat down because TQQQ is going up, so SQQQ is going down. All right, so looking at Tesla, I see resistance on Tesla up in the 255 range based on the time frame of October 17th, 18th. I see something in there. It's coming into this range, so it really may be worth, giving it a moment to see what it does when it gets here. But if you see, Tesla's been consolidating for a while. It's like it might have busted out of this this little zone right here a little bit. So it may be ready to ride. But even if that, you also have resistance up here at 266. So if you really want to trade Tesla as a credit spread, call credit spread, you actually can go up, to the 265 area, right? You could potentially go up to 265, put on that, maybe go out an extra week so you can make sure that you get decent premiums, because the further away you are from current price is the less chance you're going to have of getting decent premiums. So let's say you would go to, again, nothing that I talk about is investment advice. I didn't say that this time, but I'm saying it now. Nothing I talk about is investment advice. I'm just talking. I'm showing y'all what I do and showing you what, you can think about. You can say 265, 267.5 call credit spread would be above. That would be above this resistance here at 266. It's going to be, 266 is the resistance, but you're kind of in the middle of it. But if you do it for the week, even, you got it. It's going to take a little bit more time to get there. And for support, you could look at the bottom of this. Here, there's a gap here. The bottom of all this consolidation is in the 231 area, but there's a gap down here. So if you just want to be outside the gap, that's at 224, right? So if you wanted to go wide, you wanted to go out here, and then you wanted to go underneath, and you want to go wide, you could do what's this 222.5/225 PCS. That's gonna put you below. That's going to put you below, it puts the support between you and current price, puts a resistance between you and current price. If you want to be a little closer, you can do like I put on the graphic. On the graphic, I have 255, 257.5, which is basically right in here. That's going to be a little bit, but I would, if you were going to do that one, the 255, 257.5, I would wait until price hits the resistance and turns back. Right, you're going to want to let it do a reverse before you do that one. You may do the call credit. The put credit spread first, which is 240, 242.5, which is at the bottom of this. There's a little bitty gap. That's not in the bottom there. It's going in here. Let me put a line on it just so you can see. I'm not sure if y'all can see it. It's kind of small. As far as I've got the graph small. But remember, support and resistance are interchangeable. So 243, right in the middle of here, in the middle of this whole consolidation zone, there are some resistance places here, and now they are support because price is above it. So 243.87 is now support, and when we're talking about 240, 242.5, it's gonna get you a little bit closer. But if you're only doing it for the week, you could possibly be okay. I don't usually trade Tesla, so I'm not comfortable with, I don't really know much about how it moves. Those of you who trade Tesla for longer or have traded Tesla in the past, you really know how it moves. So you're going to use your judgment, on that. All righty. So I don't really trade Tesla like that, but you use your judgment. Okay, so let's look. We'll go to Mara next. Let's go see. Mara looks like it's on the put credit spread side. Boom, boom, boom. Mara's on the put credit spread side. Let's see what we got here. It's going. This is the stuff that's working along with Bitcoin. Support here, I would go, if you wanted to go down to the good support 14 and some change. What did I put on the graphic? I put 15.5, 16.5. Oh, I got that's a, why does that say put credit spread? Those are call credit spread numbers. No, maybe they're not. No. Those aren't call credit spread numbers. Those just higher. It's closer. I'm gonna tell you why I put that there. I do know why I put that there. 15.5, 16.5. Two reasons I put that there. Number one is when we look at the trades and probability out of the money, this is a good spot for that. The second reason is there's some resistance and support in here. See, there's a place here where price went up and then dropped back down. So you could look here to say this is also Going to be support 15.7. There's another one here, but that's in the 16s. So 16.7 shows us here. I want to go look at Mara on the trade chart though. Let's look at Mara. Remember, we were talking before, every week we talk about using probability out of the money. Probability out of the money as or delta. These two kind of can work in either or either or. Put credit spread numbers. If you're looking from now to next Friday, expiration date here, you got a plus minus number over here to the right, which says that the broker believes it's going to either go up 2 and some change or go down 2 and some change. Well, going down 2 puts you at 16, right? That puts you at about 16. So somewhere 15.5, 16. So if you're looking here at probability out of the money, 16 has an 81% chance of being out of the money. The probability of being out of the money. Okay, so this is what this is. This is based on statistics, right? So nothing is ever all the time. That's why it's 81%. Okay. 16.5 I have as a 74% probability out of the money. A lot of times when I'm placing trades for credit spreads, I look for something that's at least 70%. If I can get a decent premium and go one more strike, then I will. But where I start looking is something that's above 70%. This is a 0.21 delta, 0.15 delta. These are both, to me, good spots. That's why I picked 16.5, 16. Let's turn it over to spreads, though, and see what we would get. If we did 16.5, 16, right? If we were, I think on the chart I have it as a 16.5, 15.5. If you were doing that, you're going to collect $16. Come on, screen. You're going to collect $16. And this, the market is closed, so you'll need to look at this when the market is open. But you would collect $16 in credit from a one spread or from $100. So $16 of premiums, $100 of collateral is about a 16% return, right? $16 in premiums using $100. Actually, not use $100 of collateral because they give you the money. That's a 16% return on collateral. And I got that number because I took the 16 and divided by 100. 16 divided by 100 equals 16%. Okay, it's 0.16, which is a decimal. You turn it into a percentage, and it's 16%. That's a 16% return on your collateral within 1 week. So you can go a little bit further away. I mean, if you want to go another strike away and make this be less, but I would suggest that you try to get at least 10% return on your money because why not? If you go leverage your collateral, don't forget about your fees, but definitely try to get as much as you can out of it, right? If you were going to go, which I wouldn't necessarily go looking on the call credit spread side for Mara because these things are going up at this point. But if you were going to go to the top side, you go to maybe 76%. This puts you in like the 20.5, something like that. Now, anytime you can get both sides, if you can turn on both sides of this, you can use the same collateral. You don't have to use any more money. 20.5, 21.5 brings in another $12 for that same $100 of collateral. So you would have the $16 you took in from the put credit spread side, the $12 you took in from the call credit spread side. That's $28 out of the with 100 of collateral, 28% returns. But you do want to be sure that prices is going in the direction you want it to be going in. I don't generally do them all at one time. If I think price is going up, I believe price is going up, I'll do the put credit spread side first. And as time passes, if I really like it, then I'll go and put on the call credit spread side later, which is something we did last week. It works a lot of times and sometimes it don't. The Google thing worked out great. We did Google last week. We talked about Google on our Sunday night call. And we talked about it again on Wednesday when I went live on Wednesday. And that trade played out nicely, right? Iron Condor on Google because Google had been consolidating. Let's look at it real quick and then we'll go back to our list. Yep, I got the right Google. Got to look at Google. Okay, it's been in between these two zones for, well, that was all last week. What did we pick? We must have went up here and down here. I think I don't even remember what I had last week. Oh, I got my book. Let me look at my book. I write everything in my book because I'm trying to do a much better job of keeping track of my trades. I had 130, 131 put credit spread. Okay, so I had 130, 131 put credit spread. Let me put on this some lines. 130, 131. I had this as my bottom. And then the next day, I did 135, 136. The next day, I was up here. So this was my trade. I wanted price to end between these two zones. And it did just that. I put it on, said the 13th, which was what, Wednesday? Yeah, Wednesday I did Google, the PCS side, and then Thursday I did the call credit spread side. I did put credit spread down here on Wednesday, and then I did the call credit spread on Thursday. Yep, worked out okay. Worked out okay. All right, who was next? Let's see. Upstart, we said. Didn't we say Upstart was next? Curtis said he had 138, 139. Oh, you went a little bit higher than me. And 131, 132. What day did you get into yours, Curtis? What day did you do your trade? We are on, I'm looking at Upstart now. Looking at Upstart. Okay, if we check our chart, we've got a gap here that it's hanging out at. It was up here. This is either two kind of doji-ish, so we got to keep that in mind. And our support, there's a little bit of something here. And then really support is there, 35. What did I put on our graphic? Upstart, we've got 39.5, 40.5, 39.5, 40.5, because the price is up here in the 44s. So I've got us below the bottom of this gap. We're in the middle of this here, 39.5, 40.5. I'll also show you what makes me pick that. I'm looking at 39.5, 40.5. Nope, got to go to single. Okay, 40.5 is 74% probability out of the money. 74% probability out of the money. Okay, is the 40.5. You got in on Wednesday, same day as me, probably after our call. I think that's what I did. I got in after the call on one side, and then the other side was the next day. 39.5, 40.5. Let's see what we got as far as money goes. 40.5. Now, again, remember, the market is closed right now. These things will potentially change tomorrow. But 39.5, 40.5 on Upstart is an $18 credit. At this point, it's $18 out of the 100 of collateral. That means that's an 18% return for the week. Okay. These are my thoughts here. Let's say you take $500. Say you take $500 and you pick 5 different one spreads. Maybe you pick, Upstart. You pick a T-Triple-Q. I'm just throwing out names now. You pick out Amara. You pick an Intel. You pick SOXL. Let's say you just pick 5 things. Maybe try to, separate out the sectors. Make sure get one that's in the tech space. Get Affirm is in the money space. They're fintech, right? Let's say you did Upstart. Upstart, I'm not sure what space they're in. What is Upstart? TTD. Maybe you just pick some different stuff. You pick 5 different ones. If you do $500 and you get a return of 15% of $15 off each, if you got a minimum of $15 off each, right? I'm not sure if I can get me a screen here. Let me get me something to type on. I'm a visual learner, and I think a lot of you all probably are too. But I need to see things, and once I can see them in my head. When you hear me talking, you'll see me looking up. That's because I'm looking to the blackboard within my brain. I'm looking at stuff that I can see inside my brain. But that's what I'll do. But anyway, I need to see things. So let's say you use $500 of collateral. Okay. And you pick 5 stocks for, let me type right, stocks for 1 spread, credit spreads. Yep, let's say you pick and you do, can everybody read that comfortably? Yeah. Try to spread out the sectors as best you can. Don't pick everything. Like, don't pick Riot, Mara, Coin. I mean, don't pick all the same thing. Don't pick AMD, Nvidia, SOXL, Taiwan Semiconductors. Break up the where things are. AMD, AMD, Amazon. You can break it up, right? Pick 5 stocks. If you receive, let's say, $15 in premiums from each of the spread trades. Yeah. You will have received, right? 15 times 5. What's that, $75? $75 in profits for the week. You used $500. You get $75 in profits for that week. That's for the first week. Let's say week 2. You use the same $500. That's assuming, of course, assuming that none of your trades got breached, assuming that everything went okay. This is what, we're making that assumption that all went well, that you were in good, safe places and all your trades went okay. Week 2, use the same $500 for 5 stocks. Okay. You receive $15 in premiums for each. That equals another $75. Right? So now your total, now you got your for week 3, now you're using, you will have $650 to use, because over the last 2 weeks, you've made $150. Right? So week 3, you got $650 to use based on the same $500. You're just rinsing and repeating the same money. Right? So week 3, you got $650. So pick, oh no, I'm not there. I'm going to go down here. We're on week 3 now. So pick 6 stocks. Right? And then you're going to make $15 each in premiums each. That's going to equal what? $90? Well, the thing's just jumping around. What is going on? $90 in profits for the week. So for week 4, you will have what? $740? Is that good math? Week 4, you got $740 to use. So pick 7 stocks. $15 in premiums each equals $105. And I think you all are getting the point, right? So for week 5, you got $845. You haven't put any more money in at this point, right? You haven't put any more money in. Yes, I know. I already know. I can hear y'all saying, even though nobody's saying it. This is assuming it all went good. Yes, it's assuming it all went well. It's assuming everything went well. But even if you bring this down, maybe it's $10 per week that you're making because you're going a little further away in strikes. Or maybe one out of the 5 or 6, 7 stocks. That's why I say pick different sectors. All of the trades won't go bad at one time. If you put them all in one space, if you put them all in one sector, your opportunity of them all going bad at one time is high. Yeah, if you pick all Bitcoin things and you got put credit spreads and all the Bitcoin starts to tank, then all of your 5 trades are going to go together. That's why I say diversify it, right? And then you put yourself on an alert or a stop loss plan that includes shutting it down. If you are going to receive $15, shut it down if it gets to where it's worth 45. If it's going in the wrong direction, it's not going to recover itself, then shut it down early. You don't got to wait till the trade's over, till your whole other $85 is gone. You can, shut it down early. That way you can minimize your losses. But on the other 4 or 5 trades, you still are making your profits. And you just rinse and repeat that same $500 from the beginning. And then as it keeps growing, here we're talking about, we're on week 5 and we've almost, I would say you've almost doubled your money. You almost doubled your money. You're more than 1.5 your money. You 1.5 your money. Okay, I'm going to keep going because I want to know how long it takes you to double your money. So pick 8 stocks here. 8 stocks, and maybe you don't necessarily pick 8, but maybe you start to do 2 contracts of the 5s. Of the first 5 you had that was working really good, that you were rinsing and repeating, maybe you start to do 2 contracts. You don't have to add new stocks all the time. Pick 4 or 5 that you really like and use those over and over and over. That's going to be better anyway, because you're going to then be getting used to seeing that chart more often. You're going to see how that, like I was mentioning, how does Tesla move? If you're trading it all the time, you will know how it moves. If you watch Amazon all the time, you'll know how Amazon moves. Amazon's a 1 spread. Use that over and over and over each week. TQQQ, 50-cent spread. Use it over and over. SOXL, 50-cent spread. Use it over and over and over. All right. Okay. So week 5, we're going to pick 8 stocks. Okay. $15 in premiums each equals how much money have we got now? Right. 15 times 8, 30, 60, 90, 120. We've got $120 in profits. Right. Week 6. You got now $1,065. Right? Is that good math? Nope, that's not. $965. Oh, what happened? You got $965. My week 5 stuff went away. Week 5, you will have $120 in profits. So use 8 stocks. You will have, what did I say, $845. My thing got taken off. I got to go back and recreate it. Okay. Okay, I think I'm good. Week 6, you got $965. So you're almost, in 6 weeks, you've almost doubled your money. And that's assuming that everything was 15. Some of the examples I just showed you were $18 in profits. And if you did both sides on that other one, you made $28 in profits. So $15 is very conservative. It really could be 20, it could be 30, it could be 25, right? And you would get there even faster. But 6 weeks later, you doubled your money and you weren't doing anything wild. I'm thinking at this point, if you're getting $15 in premium per 1 spread stock, you are not doing anything that's all aggressive. Now, if you're getting $30 and $40 a week off a stock, that's aggressive. And your chances for that not going right more times is higher because you're at a higher delta, you're at a lower probability out of the money, that kind of thing. But if you're staying in the place where you're between 75 and 80% out of the money and you're pulling in about $15 on each side of a credit spread, about 6 weeks, less than 6 weeks, honestly, you will have doubled your money. So if one of your trades goes wrong, are you assigned the shares or do you just lose the balance of the spread? I'm not sure if I explained my question. Oh, that's a good question, Erica. Erica's asking if the trade goes bad, do you get assigned the shares or do you just lose the balance? So if you leave it to expire and it's breached, the broker will try to assign you the shares. So if you will be put the shares. If your account can withstand the 100 shares, the broker is going to give them to you. If your account will not withstand the 100 shares, the broker, when I say withstand, is your account big enough to hold 100 shares of blank? Do you have the money there? If you do, the broker will give you the 100 shares. If you do not, the broker will basically put you the shares, assign them, but then they will exercise your bought leg. They will exercise your bought leg to basically make you buy or what you don't have to sell. Basically, they'll make you buy it, and you will suffer max loss. The way that you fix that, or you avoid any of that stuff I just said, is if you get to the end of the day, maybe you get closer to expiration, you close it yourself. If you close your trade before Friday at 4 o'clock or 4:15, 4 o'clock. If you close your trade before Friday at 4 o'clock, the broker's not going to assign you anything, right? You close, unless it's so far past your strike that somebody decides to exercise early in the week, but that rarely happens. And it always happens after the market closes. So if you get to the end of a day during the week and you see that your trade is significantly breached and you want to close it to spare yourself, then just close it. You buy to close, basically, you exit it on your own. That's how you do that. Okay, there's definitely ways to mitigate it. If not, the broker will assign you, and then they'll exercise your other leg and basically make you buy what you don't have to sell, and you suffer max loss. If you only have one contract per se on a particular thing and it doesn't go your way, then your max loss there is $100. The most you can lose on a spread is the width of the spread. If it's a one spread, you can't lose any more than $100. And they gave you part of the money. If they gave you, $15, and at the end of the trade, they close it as max loss, which would be $100, they take their $15 back, and then you pay $85 of your money. This is why I didn't say take the $500 and put it all in one place. Because if the $500 is all on one trade and something goes wrong, then that $500 or 5 contracts goes all at one time. If you've got 4 or 5 different stocks, then if one doesn't go well, you've got the other 4 that could mitigate the money that you lost over there. Right? You should have some iron condors going. I mean, there's just so many ways to use credit spreads to grow an account. I just did an example with $500. What if you did an example with $1,000 or an example with $2,000? I mean, some of y'all got some munchies in them accounts that's just sitting, and it could be being used in a strategic way. Believe me, I am not suggesting that anybody get all wild and random with their money. I'm not saying that, but I'm saying that your money that's sitting and may or may not be growing or earning anything could be getting utilized to grow it in a systematic way, in a strategic way that is, I'm going to use the word safe, not trying to convince anybody to do anything, but I'm saying that you got the resources, and some of y'all could be using those resources once you learn a skill that you can use that's repeatable, that is not high stress, because some stuff is high stress. All right, let's go look at some more stocks. I veered off onto showing how credit spreads can help grow your account. And though that is a very good thing to know, not trying to really convince anybody, but I do want you to see that it can be used to grow your accounts pretty nicely. Okay, we looked at Upstart. Let's go look at Intel. Intel's got a lot of promise. Got a lot of promise. Look like I think it's on the put credit spread side. If I was doing a look just by checking out, I see a spot right in here, and I see another support down here. Resents up here. Did you finish the double of the money? Yeah, I did. 6 weeks. Yep, I showed that in 6 weeks you have $965. That is that's only if you took 15 a week. If you took in 20 a week, or you did iron condos, it can happen much faster. At the most 6 weeks. If you're being very conservative, and you could be conservative and take in 25. Again, not saying that anybody should do anything that's all drastic and risky, because you don't have to. This is my point. You don't have to. And these trades don't require you watch them all like a hawk either. They don't require you watch them like a hawk. You put on an alert that says, if it gets to this price, basically alert me that it's there. You go make a determination based on the chart, and then you go on about your day. This allows you to do some different things with your day, so you're not stuck looking at charts all day long, or looking at the screen and hoping for the best. Okay, so this is Intel. what did we have on our graphic for Intel? We had 44.45 as our put credit spread. And that's based on this zone right here. That's based on this stopping place. This zone is based on November 20th and November 29th. It is coming here twice, boom, boom, and it's coming here. It did pump up past it now. So now this zone is no longer resistance. It is now support. It was resistance back here. It was above them. It was above me now, but now it is below. So this same zone is now a support zone. But let's go look. What does the trade look like? 44.45. Let's go see if these are a good place. Okay, so 44.45 probability out of the money is about 70%. If you want to go one more strike to maybe 78, if you feel that's a little close, get a little closer, you can go to 44.5. Okay, I'm gonna switch over to the vertical. If you want 44.5, 45, because it's a little closer, so 70%, like I said, this is paying $13 for a 50-cent spread. $13 for a 50-cent spread means you're leveraging $50, but you are taking in 13, right? That's a 26% return on collateral. Okay, if you wanted to spread this out, make it 44.45, 44, you're going to take in $24 as a credit for a one spread. If that feels a little close, because 45, the price is $1 away here, and you see the plus minus number is $1 is 180, so maybe you want to go down to 44.5 and give yourself a little bit more room, go down to 44.5, 43.5. That's still paying $14 in premiums for a one spread. All right. You got a one spread there. And if you want to look to see what does the top side look like, again, we don't enter iron condors at the same time. I enter one side, then the other. But above here, 48.71 is what we see there. Let's go see what the call side says as far as numbers right now. 78.48 is at a 78% probability out of the money. So I would go with like 48.49. 48.49. That's taking another $12. The other side we were taking in what, 14 and 12 gives us $26, all using that same $100 of collateral. A 26% return on your collateral using Intel. Now Intel is one that's going up and up with in the space. Notice the chart shows it's been going up with the NVIDIAs and AMDs and those guys. So I would do, put credit spread. I would look at a put credit spread first. The price is kind of in the middle of two zones right now, but I would look at a put credit spread first. Now that it's gone through this resistance area and it's moving up a little bit, I would look at that. But you also want to keep in mind, sometimes I forget to say this. If you're doing, like we had a person last week was looking at SOXL, I think she might have mentioned it earlier, SOXL. When you're looking, SOXL is an ETF, right? SOXL is the semiconductor ETF. It's comprised of AMD, NVIDIA, Taiwan Semiconductors, Intel. It's got all these guys in it. When you're working with ETFs, you do want to know the major player inside of that ETF. That way, if that major player starts to move, you know that your stock is going to move too. So let's say you got SOXL and price is going, and price of NVIDIA and AMD jump up. That means SOXL is going to go too, because it's comprised of, it's going to go with whatever it's comprised of. So you want to watch the different things that are inside of your ETF if you're trading into ETFs. And with Intel, you're going to want to look at the other ones, the other stocks in the sector. What are they doing? Because sometimes because for me, I look at NVIDIA, and NVIDIA is, moving on up and out the way. But NVIDIA is what, a $500 stock almost? That's a $500 stock. That means it's going to be, that means the credit spreads are 5 spread. I might not work with that. I don't want to necessarily do a 5 spread. I'm enjoying my one spread, doing 4 or 5 different one spreads. So where NVIDIA is running up, somebody else may look at that too and say, well, NVIDIA is $500, but I can trade Intel for, much less. I can trade SOXL for $20. I can trade Intel for $40. I can trade SOXL for $30. I can trade AMD for $180. I mean, so somebody who's thinking, I might like NVIDIA, but I can benefit from the movement of NVIDIA by using somebody who doesn't cost as much. Right? You buying one share of NVIDIA, you're buying, 2.5 shares, actually 3 shares of AMD. You can, how that goes. You say, okay, I like NVIDIA, they're moving up, but if they're moving, so will these other guys. These other guys are going. Let me trade them. Let me trade the other guys. All right. All right. When we looked at INTC, we looked at Mara. Okay, last call no alcohol. What else we want to see? Wait last one day. We're gonna do one more. We covered a bunch of stuff. I didn't think we looked at AMD though. We can look at that one before we go. AMD has done me right for several weeks. Let's look at. I don't think we looked at much over here in the call credit spread side. We looked at Tesla. I'm gonna look at Trade Desk, TTD. Anything else over here that catches anybody's attention? Save, I believe, is Spirit Airlines. AR was something else. I think it was a biotech. BP, of course, is gas. Airlines. Devon is energy. Okay. Let's see. What did I say we was going to look at? TTD. The Trade Desk. That's what we do. We trade. We're traders. That's D. Traders, not traders. We're not traders. We're traders. Okay. Looking at the Trade Desk. Call credit spread. What I see here is resistance is in the 79 and some changes. Looks like this gap got closed. Yep, it went right up to the same spot. This is the bottom of the gap, the top of the gap, sorry. And it's at it's the top of this candle. So the gap is now closed. It came all the way, all these days and filled that gap. Most gaps like to be filled. Keep that in mind. So I see 79.68. Honestly, that we're at the top of that, we're at the gap. It's probably going. This was a seller's gap. Seller. See how it's kind of went up, down, and then they got to the top and went down again. 79.68. If you want to go a little higher, there's another resistance at 80.96 and a third one up here at 86.02. What did I put on the graphic? I put 78.79. Ooh, that put us in the close. 78.70. I think I picked that up based on the probability out of the money. 78.79. Yep. See, 78 shows a 79% probability out of the money. 77 is a 71% probability out of the money. Plus minus number is 3. So if you're adding 3 to this, you're probably at 78. This is like 75. Add more, 78. 78.79 is what I have on there. So let's see. Boop. 78.79 is paying $15. $15 for one spread Trade Desk on the call credit spread side. Basically, according to the chart, it hit its resistance place or support place. It's the top of that gap. Remember I told you the gap would have been resistance. It hit that and turned back. Shoot. It said, yep, we did. We have done as the Lord has commanded, served our purpose, and now we came on back down. Could it potentially go back up? Of course. It's got another gap here, though, that it needs to fill. The gap here, it's kind of got into it a little bit, but it needs to finish filling that gap up as well. And it's right down here at it. It closed at 74.88. Right, this candle closed at 74.89. That's that. Oh, I want to talk about AMD before we left. Last one. This is really the last one. I'm closing for the third time. We've hung out for a long time today. I'm way past how I usually do. Okay, AMD. Y'all see the AMD's on a trend going up. It does look like it's trying to do some turning here at the top. These candles show that it's trying to slow down and turn around. So you want to keep that in mind. But it could also be resting to gain strength. It also be just resting to gain some strength. But here we got two dojis pretty much. If we're looking for some support will be right in here. I probably would go down a little lower though, just to give myself some room. I probably would get down this. Let me change it to a line chart because it's not real easy to see what's going on. When you change it to a line chart, any place you see where the price just kind of stops and it's still like a chair, we've been told it was a chair, then that may be a place of support. Also up here, with price has stopped right near where we are right now, but it might be good to see what else happens up in here. This is a little close for you to pick, in my opinion, to pick for a credit spread that's going to go all week, right? You want to give yourself a little more room if you're dealing with credit spreads that are going to go all week. And then I think AMD may be at an all-time high or a long-time high. Yep, there we are. It was in the same area back in January of 22. Looks like it's right at the resistance area though. If you look at where my mouse is right here, it's right. It came right into that. Oh, it's a little bit past it actually. To be honest, it has passed the spot there, but it's a zone, so there's room inside of the zone. Right, so let's switch over to see what kind of numbers we're talking about for AMD. What did we say we were looking at? A call credit spread or a put credit spread? AMD is on the put credit spread side. Okay, looking over here. 73% out of the money is 135. The plus minus number is 5.9 or about 6. So I would probably be more convicted about that. 133, but that takes you down a little bit lower. 82% probability out of the money. I'd get somewhere in between those two, between 133 and the 135. Okay, 134 is going to pay about $19. So actually you got room to go down one more to the 133. It's still paying $14. No reason to get in closer if you don't have to. 132, 133. Is that what I have on the paper? I don't think I do. Oh, I got 134 and 35. That's going to be a little close. But that's based on the probability out of the money. That one's paying $23. Do you execute one side first in the iron condor or just enter it separately, execute once for both? I do them separately. So based on what the chart is doing, I will look at one side and then do what I think is, happening for that side. So if the prices are going up, I'll go with a put credit spread, or depending. If it's just come out of a zone, then I'll go with that. But I do one side at a time. I do one side. And then depending on how the price has moved, I'll go and then do the other side of that trade a subsequent day. Generally, I don't do both sides in the same day. I will do maybe a call credit spread one day and the put credit spread the next or something like that. Some people do enter iron condors all at one time, but I don't think that's the best way to get the most of your premiums, because the premiums are better when price is moving towards the strike price you're talking about. So if you're doing a call credit spread when price is going up, you're going to get better premiums when price is going up if you're doing a call credit spread. And you're going to get better premiums for a put credit spread if price is coming down. So if you just do an iron condor, price is only going in one direction. That means the other side is you're not really getting the best premiums. So if you got price going up and you do a call credit spread for a certain amount of money, believing that it's not going to come all the way to your strike, and then price hits the resistance and reverses, and then you do a put credit spread under here based on price coming and going, then you're going to get the best money on both sides. So I don't generally execute them together. I usually execute put credit spread, call credit spread separate. Okay. Wow, we've covered a lot today. So We looked at what was last week. What last week looked like. We may be in the middle of a rally, but even though we're in the middle of maybe a rally, I just did AMD. Even if you're in the middle of a rally, you're gonna want to still utilize your technicals. You still want to look at your technicals. All right. Just know that we're coming into Christmas, maybe a little bit less volume because there's not as many folks in the market. So you keep that in mind. Let me see. And you always want to set yourself where you can, where you can look at what you got going for a trade. And again, you don't have to watch it, but use alerts, right? I'm not a huge fan. I don't really use stop losses on credit spreads because a credit spread can be good, the trade can be fine, but the premiums can be elevated for many different reasons. Maybe there's volatility in the area on the day. Maybe the price is moving towards your direction, but it hasn't come past your strike. So I don't really like to put on a stop loss on credit spreads per se. But I have a credit spread. I have a stop loss in my mind. And I use the alerts to help to see whether or not to turn it off. And I'm looking at the chart to make sure that it's still doing what I assumed it was doing or what I thought it was doing anyway. Looking real quick at Save. This is Spirit Airlines, I believe. Call credit spread will be right at the 1559. I would want to make sure that it turns around before I got in there. It's right into the zone, and this is this should be a strong zone. But see this big old engulfing candle, lets you know that it hit this 1559 and dropped big time. But if it comes back up here again, it may do the same thing. But you kind of want to get an indication that or you can go up to the next level a little bit higher to get, so that way you give yourself another buffer. I believe we had call credit spread on there, but if we're looking at a put credit spread, you're also in the 14s. I don't know. Save has been consolidating for a while. See how it's between these two zones for a minute? This has been 2-3 weeks. It's been between the same zones. This is 5 days. This is 5 days. Yeah, so about 2.5 weeks. Let's go look and see what the numbers are. Above 15.5 and below 14.2. Looking at it singularly, above 14.5, or it switches over here to almost, this is weird, 15.5, 16. There's no 16 in the middle. What happened there? So probability out of the money at 17 or 17.5 would be there. 17 or 17.5. Yeah, these numbers are a little off because it's good. The premiums might be good, but they shouldn't be. There we go. That made more sense. 17.5, 18 is paying $2, which is not what we want. But for 17 versus 17 to 18, let's see how it's showing that it's paying $32 for one spread. And I don't think that's quite the case either for a $15 stock. So this is one you'd want to look at. But I show 17, 18 as the call credit spread. And if we're looking for the put credit spread side, maybe 13, 13.5. I think I said 14 was over there. 13, 13.5. See, these numbers are looking wonky. That's $10. Which makes sense. 13.5 is $10 credit, which is a 20% return on your money. If you want to widen it out a bit, $13 for the one spread. That's pretty farther away from current price because its prices was going up. Lots of opportunities. I see lots of opportunities in the market. Again, you can take $300, $400, $500 if you want. If you already got in the market, I'm not saying please don't take your rent money or Christmas money or whatever else to come trade with. That's called gambling. That's not what we do. That's not what we do. So, we're going to trade with skill. We're master traders here. We're not gamblers. We're learning how to use a strategic skill. We're overcoming our emotions, our FOMO and greed and all those things. You got to overcome all that stuff. So as you begin to grow and you start to scale your trades, your emotions can't be involved in it. Because if you're trading and you trading $100, what happens when you're trading $100,000? right? If your emotions are taking you out, you put $100,000 on the trade, you're gonna be no good. And so we're working now to overcome our psychology, so that way when we scale our trades up and we get ourselves to 6 figures in our trading accounts, that we don't have the emotions. We're not fighting those anymore, but that we're, trading strategically, trading with skill, because we're skilled master traders in here. And if we aren't yet, we're working on being skilled master traders. We're learning how to chart properly, how to do technical analysis properly, how to enter without emotions, how not to be greedy. That's what we're doing. We're getting our money at the market, though, because it's here for us, and we want to get some of it. And if we're going to get it, we got to get it with strategy, because we're trying to get and keep, not get and lose. We want to keep our monies. All right. All right. So if you haven't subscribed to the channel, please be sure to go ahead and do so. The membership is open. If you're interested in becoming one of the E2T members, please head over to my website, which is Educator2Trader.com. And you can hang out with us over there. Every day we're going live in the mornings. We was going live. We do a meeting where we're in the market while the market is open. So I'm not really going live every morning, but I'm with my group in the morning when the market opens. Right? You can go to my website and you can go to the membership and get signed up. It's $97 a month. We do daily calls. We have an exclusive Telegram. We have coaching calls on the weekend on one Saturday a month, and we have a coaching call every Wednesday evening. All right. If you're looking for any of these resources, all the things that go along with the stuff I talk about, credit spreads and puts and all the other things, all that stuff is at my website. All these training resources are there. All righty. Well, I'm wrapping it up. Landing the plane, as they say. We do 2 things in this community, 2 things in the Educator to Trader community. We stay green and we get this money. All righty. I will see you all in the market. All right. Bye, everyone. Bye-bye.